Hello and welcome to this special video introducing you to the concept of volume spread analysis and the trade guider system to analyse the commodities markets. And we're going to be looking today specifically at the gold market, which is currently in the news, and the silver market, because there are great similarities now between those two markets. So one which has already been sold off, which is silver, and the other one that's looking very, very weak at the moment. And we're going to start by looking at a news story from today. This is the 10th of August 2011, and the news is very, very bad. Stock markets fall again, and it's just absolutely horrible. All the negative news that you can see, I'm not going to spend a lot of time reading it because I'm sure you'll all be aware of it. But most importantly is the news at the bottom about safe haven, and I want to just draw your attention to this comment. So it says safety. Meanwhile, cautious investors continue to hedge their bets in so-called safe haven investments, including gold, which again has consistently hit record highs over the last few weeks. Now, when a market is in a strong trend, it tends to go on a lot longer than we think it will. But much like any market, at some point, the smart money, the professional side of the market, are going to take full advantage of the buyers at these tops. And how can you know in advance that these type of activities, this selling, is taking place? There is only one way. Your past price analysis will not show you it. In fact, highly likely, anyone using a technical analysis tool to look at the gold market right now will probably be getting buy signals. I want to show you what Trade Guider is saying today, and I want to show you what I think will happen over the next week or two so you can follow it through. Now, at the moment, what I know is that gold has been in a strong uptrend, and there's been many indicators in Trade Guider to buy gold. In fact, several really good ones. But at some point, if you're long gold or you're just about to go and buy into the gold market, you've got to be cautious. And the reason I say that is for the same reason that many traders got caught on the wrong side of the market in the oil market. Back in, we saw it not just in 2010 with BP, when everybody was basically selling the BP stock, and in fact you should have been buying it the day they told you that the well couldn't be capped, and the chart is very, very clear on that. It's in my book. And it was the same with oil in 2009. We were all told it was going to $200 a barrel, and at 147 I saw a series of signals very similar to what I'm about to show you now, and oil ended up at $35 a barrel 6 months later. So these are all facts that you can verify by looking at some of the YouTube videos that I've done. But I want to draw your attention now to the chart, because that's what we're going to talk about in this lesson. And for those Trade Guider customers that are viewing this video on the Trade Guider website, and you may have just bought the Trade Guider end of day software program that I'm currently using, this is the first part of a sequence of signals that become high probability. And whilst we would never want to short in an uptrend, I just want to be very clear on that, unless you're incredibly aggressive. You don't want to be shorting against the uptrend. Now, how do we know there's an uptrend? Because Trade Guider colors these diamonds and these blue bars. And if you've got more blue bars, as you can see here, then you've got these red bars, which are down bars, you're in an uptrend. And if the diamonds are green, you're in an uptrend. But this bar here, this very last, second to last bar, on the 9th of August, warns me of an impending fall in gold. And what I'm looking for is to see gold come back down in the next day or two to around the 1740, 1750 level to confirm this indicator. Okay, so this indicator here, you'll notice, appeared on the 9th of August, and it is sign of weakness, the potential buying climax. Now, this indicator we don't see very, very often, but when we do, as VSA experts, we certainly pay attention to it. I want you to look at a number of things and observe a number of things about this particular price bar. First of all, the news on this day, on the 9th of August, was very bullish for gold. Safe haven, we were told. Investors flocking to gold. And indeed, on my TV set that night, I don't watch a lot of television, but I did see the story that more and more people are taking their gold to cash it in, which is perfectly sensible. But there's also a lot of traders and investors that have gone long gold up at these tops. Now gold could continue to rally, and there will be a signal that will confirm that as well in TradeGuider. It's called no supply, or a test of these levels. But I haven't seen it yet, and in fact I'm actually looking for the silver market to pull back, the gold market to pull back, just like the silver market did at the end of April and the beginning of May. A lot of traders got caught on that trade, and they were long at the wrong time and lost a lot of money on the way down or got stopped out. I'm just suggesting here that we observe the VSA sequence that is likely, but not definite, but is likely to appear. Now, if you want to know more about the VSA sequences, you can get my second book absolutely free. There's no charge. It retails on Amazon for $24.95. But if you email us at TradeGuider and email my colleague Lauren, her email address is just Lauren, Lauren, and then S, which is for Snedeker, Lauren S, at tradeguider.com. So I'll repeat that, LAURENS at tradeguider, TRADEGUIDER.com. We will send you, with my compliments and blessings, that second book that's going to explain what I'm about to show you in a lot more detail. So we observe that the volume here is the highest that we've seen for many, many days, in fact many, many weeks. And this came in on the 9th of August, okay, which would be a Tuesday. Now we note, where does the price close on that volume? Does it close on the high of the bar, the middle of the bar, or in fact nearer the low end of the bar? And in this instance it actually closes below the 50% level of the bar. Now if that's all buying from the smart money and they move the market, I would have expected the close to be much higher, but it isn't. Now when I see this indicator, I would usually expect the next indicator to close lower for confirmation. And as I show you, in the silver market, that's exactly what happened. But here it hasn't. But nevertheless, it is forming part of a sequence that I want to put here so you can follow it through over the next week. Now, the description of the bar, every indicator in TradeGuider, and in fact we also now do a number of add-in studies for other software programs with these indicators. We have it for Infinity Charts, TradeStation, numerous other platforms that we now plug into, and you can find a lot more about that at www.tradeguider.com. But for the purposes of this demonstration, I want to show you where I see this sequence going, and if it comes to fruition, what we should then do. So, number one, the potential buying climax. Let's look at the description of the bar. It's a high to ultra high volume up bar. Now what is an up bar, you may ask? It's a price bar that's closed higher than the bar behind it. That's what we call an up bar. In this instance it's closing in the middle, when in fact it's slightly lower than the middle, and it shows supply is overcoming demand, and it indicates professional selling. Smart money selling at this level. Okay, in order to sell, the professionals have to unload into a rising market by selling to the herd, it says here. Who are the herd? Well, in Tom Williams' book, the man that invented this software, he refers to the herd as the uninformed traders, the ones that rely on the news, have probably got trading systems that look at the past price, that will be giving plenty of buy signals up here, and will be looking to see gold hit 2,000, and it may well do that. There is a signal in TradeGuider that I'm about to explain to you, that if we see it at this level, we'll confirm it, and we can go in and go long gold again. But at the moment, very, very cautious here. I was taught to be cautious, and the reason I'm taught by Tom to read these charts is when I see very high volume on these up bars like this, especially when it closes on the low. We need to now look out to the future. Now here, it says the next bar should be into fresh high ground. What does that mean? Well, if I put up 500 price bars, which is usually the minimum I look for, we need to have no price action to the left. Now, if I was charting the US property market, and as we all know, it's now in a steep decline, but had I charted it from sort of 2004 to 2007, 2008, this is probably what it would have looked like. Prices were going up and up and up and up, and then suddenly we saw television programs called Flip This House and all good things like that. And that, at that point, when everybody was buying property, was when the market was likely to collapse. Because, there's always going to be an end of a rising market. And with VSA, with volume spread analysis, you can identify that end. And when we see volume like this coming in on these up bars, only one thing we should be saying to ourselves is someone or a group or a large group has become incredibly active. And on this activity that we now see, what will the market actually do on this activity? So we then zoom back into to our chart here and we say to ourselves, okay, we've seen the indicator sign of weakness 1. The next bar should be down. That means it should close lower. So the software is very intuitive. But the next bar actually closes higher. So the bar that we see here on the 10th of August closes higher. So now, again, we read the dialog box. So if the next bar is down, closing near its lows, this confirms the weakness. So on Thursday, which will be the 11th of August, we should expect a price to close around 1740 to 1750 in this area. Certainly, though, it should be a lower close than 1785. If it closes lower than this bar, that is a very serious sign of weakness. And this bar closed here at 1743. Now, it doesn't often do that. Usually, we'll see a close in the range of this bar here. But as long as it's lower, okay, then the 10th of August bar, it's confirming my indicator, and that's clear. Now, the next question, of course, on everyone's mind is, because I do this in foresight, I'm not doing this in hindsight, let's go and have a look at what we should expect to see to confirm a decline in the gold price. And to do that now, I'm going to go and show you what happened in the silver market, and we'll go down to the July contract, which I was following. Now, again, I did this on YouTube, so you can go and check out that a week before silver had its biggest fall in 30 years, a number of things happened that led me to be very confident there would be a sharp decline in silver. Now, it did happen. You can go and check it. It was in the news. Just go to Google, by the way, if you want to find out a little bit more. If you're a bit of a conspiracy theorist or a bit contrarian, not like me, but if you want to just have a bit of fun, just go and type into Google Hunt, H-U-N-T, Brothers, Market Manipulation Silver. Okay, now what you're going to find, factual, is that in 1980, okay, 1980, Hunt Brothers cornered the silver market and moved the price up to $50. Yes? Yeah, I know some of you are going to be thinking, hold on a second, Gavin, are you telling me that silver was $50 an ounce back in 1980? What about inflation? Go and look. It was. And it got to 50, and then it collapsed. Well, guess what happened? History repeats itself, ladies and gentlemen. Here we are in 2011. On the 25th of April, we approach 50, and Trade Guider gives me one of Tom's signals, his favourite, one of my favourites. The same one. Sign of weakness 1. Potential buying climax. Now look at the volume. Look at the volume at the bottom. Now remember that the markets move on universal laws, as the whole universe we live in does. If I talk to you about the law of gravity, you totally understand that the reason you're able to sit here and watch your computer or wherever you're watching this from without flying into space is because there is a law called gravity. But actually, as a trader and investor, you should be aware of certainly 3 laws that affect all markets. Now, everyone, I hope, will have heard of the first law, supply and demand. Okay, lots of talk about that in the oil markets, indeed, supply and demand situations. They fluctuate continually, don't they? Suddenly there's no supply, and then there's too much supply. If you recall, I did a YouTube video back in 2008, in fact 2009, where I forecast the very serious decline in the oil prices. Now, why did I do that? Was I guessing? No. The chart looked very similar to what I'm about to show you. The oil market was being bulled up to $200 a barrel. It actually got to $147 a barrel. And then I saw my favorite signal, the end of a rising market. Now this is very similar. So when we see very high volume on these up bars like this, I now know the smart money are active, incredibly active. So my first book is called Trading in the Shadow of the Smart Money. Why do I call it Trading in the Shadow? Really because very few traders and investors are educated correctly about how to read the price chart. And that's what my books, both of them, do. They talk about how to read the chart, because if you can read it properly, you're not going to be relying at these tops on buy signals, which you're going to be getting from any piece of software that looks at a moving average or a MACD or a stochastic. Is going to be giving buy signals because of the fact that the market's been in an uptrend for so long. You're going to get these buy signals coming in. Now, there is, let me be clear, some very good buy signals that we see in gold, and we did in silver. Back here in March, that's what I call a test in a rising market, and it meets all my criteria. There's no weakness around. There's no selling pressure. The market's taken a dip. All the diamonds are green. The bars are green, as designated by the program. And again, a few weeks later, again, we get another test in a rising market. Very strong signal. And that is explained, by the way, in my second book, which I'm going to give you all for free. It talks about that particular indicator as being a good place to go long. However, at some point, the professional side of the market, the smart money, are going to take full advantage of the uninformed traders that are rushing in to buy at the top. And this is what I want to show you now, is how this sequence here, these three indicators, mark the top of silver. And we're now going to look, okay, for two things to happen in the gold market next week. Now that's going to be, next week is the week commencing the 15th of August 2011. Okay, that's when we're going to be looking at this. And I'm going to show you in this video what I expect to happen over the coming 2 days in gold, on Thursday and Friday, and what I expect to happen next week, looking in foresight, not in hindsight, at these sequences. So here, just for the lesson, in hindsight now, we'll look at what happened in silver. We saw the buying climax. We know it asked for the next bar to be down to confirm the indicator. The next bar closes down. Part one of my sequence has now been confirmed. Does the market collapse there? No. They hold the market up. More high volume comes in. In fact, we can see the program tells us it's high. And what happens to the price on that effort, because we talked about supply and demand being a universal law, but there's two others. Cause and effect, and effort versus result. Now this software measures those particular three universal laws. It looks at supply and demand imbalances, it looks at cause and effect, but most importantly it's put a signal on here because it's seen the effort for the price to go up is high, the volume is massive, but the result is a close on the low of the bar. Only one thing can cause that, ladies and gentlemen. The smart money are satisfying every buy order with a sell order because they know that silver is going to become weak and they want to make money as they sell to everyone that's buying, because we all know in the markets there has to be somebody to buy or sell from. But what you don't often know is how they do it. There can be large blocks of orders on the market makers' books just sitting there waiting, and they've got to make the market. When these bars show you if there's a lot of sell orders, they're massively getting satisfied. Okay, and that means that the market is weak and will fall. And we see here, it actually says something very important, okay? Look very carefully at the background. Do you have strength or weakness behind you? Right behind you, 3 days prior, massive weakness. And that signal is one of the strongest signs of weakness seen in the Trade Guider program. And then the final part of the sequence, now this is exactly what I'm looking for in gold to complete, and it's not there yet. And I'm certainly not suggesting that gold is going to roll over immediately, but I do expect a decline, certainly in the next 2 days, coming into Thursday, Friday, and then next week, if we see no demand at 1800 gold, we will expect a serious correction. And when I say serious, minimum 5%, potentially 25%. Now, in silver, it was enormous. It went from a high here of 50 on the final part of the sequence, and again, if you want to be really aggressive and short these things because you see the sequence, I would always put a tick below, or an order below where I see the supply bar. So a couple of ticks below, so that the market, because it will be quick, will move straight through it. And you can see what happened to silver. It went from a high, okay, on the 25th of April at nearly $50 to a low very, very quickly within a week of $32.30. A very significant move, nearly 40%. So that was all there in foresight, not in hindsight, in this commodity. And if we go back and we have a look now at what we expect to happen with the gold market, this is what I expect to happen. We see that we've had this bar come in, okay, that's on the 10th. Now on Thursday I'd expect the market to come back down into the body of this bar, potentially, hopefully, to penetrate the low of this bar around 1743. If that happened, that would be marvelous. That would confirm the weakness. However, as long as the price closes in the body of this bar, but lower, and this is important, it must close lower than 1785, that would confirm that there must be selling taking place. Now, what will often happen, this is, again, what often happens, not always, is the market will then have one surge up higher. It's called an upthrust, and it's going to look very much like this bar, and it could be on much higher volume. Now, the day the upthrust appears, the news will be that everyone is now buying gold, okay? And you will be very encouraged to rush in and feel that you've missed out, and they'll be talking gold up to 2,500, 3,000. Now, that's where you've got to be very cautious. What I think will happen, however, based on what I see on this chart on silver, is that the market will come back up to this 1800 level. And if it comes up and completes the sequence will be sign of weakness 198 or 199. Now, I don't know if that will be there Thursday, Friday, Monday, Tuesday of next week, but I know many of you have got the Trade Guider end of day program. In fact, this video is being posted on our website as a training, one of our training materials. So as we happen to be in a very, very volatile market right now, I would think that August 2011 has got more opportunities to be successful in the markets than I've ever seen because of the volatility. It's wonderful, and you get some really good moves. Now, we see there that on this particular commodity, on gold, we've got only two parts of the sequence in place, okay, and I'll just give you them again. Sign of weakness 1, okay, sign of weakness 1, 2, 2, and the completion of the sequence in the next 4 days. You cannot even think of shorting this. Let me be very clear. This is not something you want to rush out and short yet. You want to wait for the sequence to complete, and if you want to be ultra conservative, you wait for the downtrend to begin, which is how I trade these things. But I know some people like to get in at these tops and be aggressive. Wait for no demand at those levels, and that will be sign of weakness 198 or 199. Now, question I always get asked, Gavin, what is the chances of this going up another level? Okay, going up to the 2000. And if at this level here, at 1700, we come along here and we never penetrate the low of that bar, and that's very important, so we never penetrate this low, and we bounce along for several days or even weeks on very low volume, narrow spread bars, that's bullish. That means that market could even take another further leg up. So we have to let the chart tell us each day. It's an unfolding story. We don't want to try to be telling the market that gold will be at this price level in 6 weeks, because we don't know that. But with VSA, we can read the activity of the smart money. We can see that there has to be some weakness on these two bars if on Thursday it closes in or in that range between 1745 and 1800, and if it closes certainly within the low or lower than 1785, it's confirming the weakness. And at that point, I would expect a correction to come, possibly down to around 1650, 1600, where we had this massive surge in volume as it jumped up, as it gapped up. So certainly 1675 would be realistic. But we must wait for the chart to tell us. Now, a lot of you have emailed me and said, how can you get hold of Trade Guider? You can contact my colleague Lauren or my colleague Darren, and very simply just go to www.tradeguider.com, which is our website. We're having a new front page launched tomorrow, and so over the next few days you'll see there'll be a new website there, and you'll be able to download some videos and some other information that will benefit you. And as a trade guide at end of day software owner, remember that we do have 2 scanners that are built into the program that allow you to scan for stocks that are acting stronger or weaker than the parent index, and they allow you to scan for these indicators by number, so you can see where they are actually starting to cluster. And if you see that, and in fact I believe I can show you a previous scan that I did for the metals, and I think it was that one. There it is. Now this was a scan that I did for silver prior to the big fall in silver, and you'll notice each one of these boxes is a day, and we had a series of 1, 2, 3, 4, 5, 6, and in fact all of these contracts showed weakness, and that was in fact the week that the silver market collapsed, and it was actually collapsed just over here. So prior to the collapse, volume spread analysis and the trade guider system was actually showing quite clearly that the smart money were distributing to the uninformed. Don't be uninformed. You don't have to. You can become a member of the Trade Guider family in many ways, and I'm delighted to say that we've just recently launched a number of add-in studies for other software programs, including Infinity AT, Charts, TradeStation, MetaTrader, which is a Forex platform, NinjaTrader, amongst others, and we're adding to that all the time. So go to our website, and if you want to get the VSA system for your platform that you're currently using to trade, if it's not on our website, let us know what you'd like, and we'll certainly look at doing that for you. So from me, Gavin Holmes, I want to say God bless, best wishes, good trading, constant profits, watch out for gold. Remember, we wait for the sequence before we rush in and do anything, and if you don't know what the sequence is, get a copy of my second book completely free by emailing Lauren S at tradeguider.com, which is LAURENS at tradeguider, which is all one word, TRADGUIDER.com. So that's LAURENS at tradeguider.com, and in the subject line just please put book request, and whether you're a current customer who haven't got the book or a non-customer wants to find out more, you can have that book with my blessings and best wishes. Thank you and goodbye.